Good morning. This is Sakis Paraskevov, Senior Fundamental Analyst at IronFX, bringing you the morning comment for the 4th of November. NFP to steal the thunder from the elections for today. All lights will fall on the US employment report for October today. Non-farm payrolls are forecast to have risen by 175,000, more than September's 156 print. The unemployment rate is expected to have declined back to 4.9% in October after rising to 5% in the previous month, while average hourly earnings are forecast to have accelerated in monthly terms. This appears to be another month of solid employment gains overall, something that could reinforce the FOMC's view in the November policy statement that labor market conditions will strengthen somewhat further and that the case for a rate hike has continued to strengthen. As such, another robust jobs report may cause the dollar to recover some of its recent losses, at least at the release. However, given that politics appear to be overshadowing economics at the moment due to the US election race intensifying, we would view any knee-jerk positive reaction in the dollar as likely to remain short-lived. We prefer to wait for the election dust to settle down before shifting our focus back to economic data. If incoming election polls continue to show an almost negligible gap between the two candidates as we head closer to election day, we believe that the uncertainty over who wins is likely to continue weighing on the USD. UK High Court rules that Brexit needs Parliament's approval. The UK High Court ruled yesterday that the government cannot act on its own with regards to initiating the Brexit process. Instead, the court judged that the Parliament holds the authority to decide whether or not Article 50 will be triggered. The British pound surged immediately on the news, as investors may have begun to bet that Parliament could stop Brexit after all. However, the government immediately stated that it will appeal this decision to the Supreme Court, and the date for that appeal has been set for early December. Should the Supreme Court also decide that Brexit needs to be approved by Parliament, we could see a serious shift in sentiment around GBP as speculation regarding a no Brexit intensifies. Elsewhere, Bank of England stands pat and drops easing bias. The Bank of England held its stimulus program unchanged on Super Thursday, as was widely expected, via a unanimous vote of 9-0. The most notable part of the meeting was that the bank dropped its forward guidance that further easing may be needed in the near term and instead adopted a neutral bias, indicating that policy can respond in either direction. This development opens the door for the Bank of England to even tighten policy if needed, should inflation significantly overshoot its target as a result of the sharp depreciation of the pound. As for the updated economic forecast, the Bank of England raised its near-term GDP and CPI forecast, acknowledging both the economy's better-than-expected performance as well as the possibility of a rapidly rising inflation rate. The pound surged on this news. In our view, the Bank of England's overall stance showed that the Monetary Policy Committee is unlikely to take any action in the foreseeable future. Combined with the High Court's decision, we believe that these two factors could keep sterling supported in the near term, or even cause the currency to correct higher, perhaps until the Supreme Court delivers its verdict. As for the rest of today's highlights, during the European Day we get the final service sector PMIs from several European countries and the Eurozone as a whole. As the final indices are expected to confirm the preliminary estimates, the reaction in Euro may remain limited. We also get the bloc's PPI for September. We get October's employment data from Canada as well. The forecast is for the unemployment rate to have remained unchanged, but for the nation's labor force participation rate to have dropped. At the Bank of Canada's latest policy meeting, officials discussed the possibility of adding further stimulus. As a result, a soft jobs report could raise the likelihood for additional easing in the not-too-distant future, and thereby hurt the loonie. Given that the Canadian jobs data are released at the same time as the US employment data, if the figures play out as expected, USD CAD could surge on the news. The nation's IV PMI for October is due out as well, though no forecast is currently available. We also get the trade data for September from both the US and Canada, but these are likely to be overshadowed by the labor market data. As for the speakers, we have 4 speakers scheduled on today's agenda: Fed Vice Chair Stanley Fischer, Fed Board Governor Lyon Bernhardt, Atlanta Fed President Dennis Lockhart and ECB Vice President Vitor Constancio speak during the day. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Sakis Paraskevov, Senior Fundamental Analyst at IronFX, wishing you solid trading.